If we put gold, most of the analysts out there, what the hell do they know? They keep revising
Of
their
course.
numbers, but a lot of them are saying $6,000. So by next year, the end of next year, so you take
6,000 in gold.
yeah,
Yeah.
divide that by 42, which has been the average price range over the last 100 years. You're at $142. It's coming out of the ground at 7 to 1. So you take 6,000 and divide it by 7, you're at 857. In theory, is it possible? Absolutely. Look, the thing is this, is that no one knows what it should really be priced at because it's been suppressed for so long.
Silver's explosive move this year is revealing a market no longer governed by traditional paper dynamics. Physical shortages, aggressive delivery demands, and widening distrust across financial institutions are creating the conditions for a structural reset in pricing. Andy Schectman, a longtime precious metals analyst, outlines how this environment has shifted dramatically as shorts refuse deeper exposure, industrial users hoard remaining inventory, and global shortages force record delivery stands on Western exchanges. With silver up nearly 96% year-to-date and gold advancing more than 70%, the acceleration phase is becoming unmistakable. Major institutions now recommend 20 to 25% allocations into gold and silver, while ratio-based projections tied to a potential $6,000 gold price imply silver valuations anywhere from $140 to $850. This repricing is occurring alongside severe trust erosion in repo markets, rising systemic risk, and the growing possibility that global price setting migrates toward Asia as Western infrastructure strains under repeated shocks. As shortages deepen, the battle between industrial demand and financial demand is emerging, pushing metals toward levels far beyond prior expectations. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
If we put gold, most of the analysts out there, what the hell do they know? They keep revising their numbers, but a lot of them are saying $6,000. So by next year, the end of next year, so you take
6,000 in gold.
Yeah. Divide that by 42, which has been the average price range over the last 100 years. You're at $142. It's coming out of the ground at 7 to 1. So you take 6,000 and divide it by 7, you're at 857. In theory, is it possible? Absolutely. Look, the thing is this, is that no one knows what it should really be priced at because it's been suppressed for so long.
The true value is kind of coming out now.
Yeah.
It's when the gloves are off and now the open market is truly finding its footing as to where silver should be priced.
Now, I'm going to give you credit. You said publicly you thought it would be 60 by year end. We may be there by tomorrow. Who knows? Could fall back down too. I'm not saying that it doesn't go straight up, but if you told me that by the end of the year silver would be $100 or 95 to $100, I would believe it. It just seems as though there is a shift in mentality from not only the way that people and institutions are looking at metals. When you see Michael Hartnett from Bank of America and the chief investment officer of Morgan Stanley saying 20 and 25% of your assets should be in gold and silver, that's different. When you see Jeffrey Gundlach, the bond king, saying 25% is not overweight, that's different. When you see the U.S. government call it a critical mineral, that's different. When you see billions upon billions upon billions be delivered every month in the COMEX, that's different. I could keep going on, but it is different. The whole aura of all of this is different, as is the rhetoric coming out of the highest levels. It's different. So yeah, I mean, we're in uncharted territory. Let's talk about the pullback. And the market wants to only take the people who get it along for the ride.
Yeah.
The pullback that we saw last time, not only was the market oversold or overbought and had gone straight up, in a vertical line and needed a bit of a correction, but look at what happened and how, we were getting how many phone calls, like people wanting to slit their wrists. Is it over? Of course, I bought it too high. The run is over. You're never going to get back. And then here we are.
Andy's a shill.
Yeah. But what did that do? That was a big speed bump that threw everyone off. And that's the way markets behave. And if you don't understand that, you're not in the right market, period.
Yeah. And by the way, those are the times, and I think we said that on one of the podcasts where we said those are the times that the people that truly know why they're buying it, forgetting price, just know why they're buying it. That's the opportunity that it is. An opportunity doesn't come all that often. I mean, it's great. You're buying it up $3 on Friday and today $2. But take advantage of those days that you might have bought some up 3, up 2. But when it's down $1 or $2, don't think of it as, oh my God, is it over? Think of it as this is an opportunity for me to accumulate more of why you bought it in the
You know,
first
Rick
place.
Rule always says to me, he says, Andy, I never understand it why you go into a store like Nordstrom's and the shirt you want to buy is on sale. Son of a bitch, it's on sale.
Right.
You know?
You don't get angry about
Right,
it then, right?
right.
I know, that's the point.
Yeah, but you do, but they do. But it's an emotional deal.
It
And
is.
part of the reason is that the suppression that has been endless has delinked rational thinking and logic and intuitive process. It's delinked it from price discovery. But maybe, just maybe, because of all the things I just said, why it seems different to me. And beware of the guy who says this time it's different. I mean, I get that. It just feels different.
Well, I could tell you no matter whatever happens from now going forward, up, down, or indifferent, that Mark Rank 77 said, what should the ratio be between gold and silver be today?
16 to 1.
Ooh.
And that's what it's been for 5,000 years. And it was based, I would think, on the
Double the geologic, roughly.
no, it was 16 to 1. That was the geologic.
What do
So
you
you
think?
could argue 7 to 1, but 16 to 1 would be in line with, the Romans were at like 12 to 1. In Great Britain, it was 15 or 16 to 1. Sir Isaac Newton. That's just that's what it always was. So somewhere between 16 to 1 and 7 to 1, Keith Neumeyer says that is the geologic ratio right
Yep.
now. Biblical times, it was 1 to 1.
Yep.
Officials like on the Federal Reserve are breaking the law. They're caught and they just get dismissed, but that's it. Whereas the rest of us would go to jail. And, no one trusts us anymore. No one trusts the markets. We talked about the repo market problem
Yep.
a couple weeks ago, where it's not about liquidity because there's twice the liquidity in the system now than there was in the 2019 repo market crisis, but $125 billion gets injected into the repo market. That's crisis level injection. And it's about trust that the banks who trade with each other overnight don't trust the collateral that is being posted, largely mortgage-backed securities, both commercial and residential. It's about trust and a system that isn't backed by anything anymore. It's fiat. Trust is paramount.
It's the only thing.
If you lose trust,
You
it's
lose
over.
everything, right?
And so we're beginning to see the world has already got this, or the central banks have gotten it. But now you're seeing it spill over into our markets. And you know who's sitting waiting in the corner, waiting and with a smile, is Shanghai. They would love nothing more than to be the price setting.
Of course.
And this happens because look at the oil contract used to be quoted in London until the NYMEX took it over, and now it's rendered obsolete in London. The point is for us to be as naive and filled with hubris the way we are to think that the COMEX and the LBMA will be
The only ones that can do this job. It's
you
ridiculous.
got the nickel market failure. You got now there's a lack of trucks and manpower, and now you got an air conditioning. The whole system is screwed up, man. And when you talk about trust, to not take the bigger picture here, forget about what we are led to believe, which we all know is bullshit. The trust that is in our institutions, in our leadership, how about the fiscal irresponsibility? Do you know that in the 6 weeks we were closed as a government, they added $600 billion in debt? $600 billion in debt. In seconds, you're talking about 20 plus thousand years ago. That's 600 billion if you counted by ones. And so the point of it is that we are losing trust across the board, and it's accelerating into our markets. And that is a very, very bad thing. This is why gold is being reintegrated into the system, because it has no counterparty risk. You can hold it yourself and not worry about the trust or the lack of trust that is permeating its way through everything right now. It's a bad omen, truthfully. I don't remember the number. A massive, I'd say $40 billion withdrawal from the repo market. So at the same time or thereabouts, what they were saying basically is that this bank got in big trouble. The Fed had to step in and bail them out with a massive injection of money into the repo market. So maybe, maybe not, don't know. But it smells very fishy.
Yeah.
You know what? Who knows? It could be a revaluation. Um, it could be just that the COMEX loses trust and price setting moves to other parts of the world. Um, it would be you would wake up and the price would be a whole hell of a lot higher, and all of a sudden there would be a race, if it were silver involved, between the industrials and the hedge funds. I think that's coming, a battle for, secure it in possession, pull it off the exchange. A reset in gold would be phenomenal because there's so very few people who have any interest in it at all, and it would overnight blow up the retail market. There'd be nothing left by the morning. I think it would be scary at first. I think it would be very, very scary, and I think
Well, we live in scary times right now. There's no bullshit. This is scary times.
they say there is no bull market like a gold bull market,
That is
because
true.
the higher the price goes, the more reluctant people are to part with it, as it reinforces their beliefs that led them this way to begin with.
True, true, true. I'm definitely not going to pronounce this correctly. It's at a chef's, but I figure if I say it fast, it sounds better. At a chef says, you and I are like listening to an old married couple.
Money in the world is doing, the central banks and now the big money here in the States, they're showing where it's going. Won't go straight up, but look, silver's up 95-8% this year, gold's up 70 plus. It's certainly doing well. The thing, but acceleration behind it in terms of where it ultimately goes, higher than people think possible, as far as I'm concerned. Money in the world is doing, the central banks and now the big money here in the States, they're showing where it's going. Won't go straight up, but look, silver's up 95-8% this year, gold's up 70 plus. It's certainly doing well. The thing, but acceleration behind it in terms of where it ultimately goes, higher than people think possible, as far as I'm concerned.
Massive delivery activity in the futures market is revealing a shift in how the largest capital pools are positioning. Billions of dollars in gold and silver are now standing for delivery each month, with contracts increasingly issued and immediately taken off the market rather than being rolled forward. This behavior reflects a growing preference for secured metal over paper exposure, especially as industrial demand tightens supplies and global policy frameworks elevate silver to critical status. The surge in physical claims across December's early sessions underscores how strategically positioned buyers are removing liquidity from the system, further pressuring an already strained market. At the same time, global recognition of silver's essential role in energy, defense, and technology is accelerating the long-term repricing of the metal. As supply deficits widen and institutional flows increase, the setup continues to tighten around higher structural valuations. Let's get back to the interview.
Talk about what the smart money is doing, the biggest money in the world, the people who don't do these things for the hell of it, right? Day one of the December contract, we saw 7,330 contracts were stood for delivery. That's 36. Excuse me, that was gold. No, is that silver? Yeah, that's silver. 36.65 million ounces, worth more than 2 billion. Not a record. It says April saw 11,692. Day two, which would have been up through yesterday, there had already been 2,397 million troy ounces of gold, plus a knee wobbling 41.525 million troy ounces of silver issued and stopped. I should not read without my glasses.
Would you like mine?
No, yeah, maybe. Anyway, so the bottom line is that we have seen a tremendous amount of gold and silver delivered on the first 2 days. I don't know what happened today, but we've been seeing a pattern lately where later in the month we see contracts that are issued and immediately stand for delivery. It makes it much more difficult to analyze this stuff because most contracts would settle within the first day or two. We're seeing a lot of that happening. So, but this is every single month. Billions and billions and billions of dollars are flowing into the COMEX, and a lot of it standing for delivery. Doesn't mean it all leaves. A good deal has. A lot stays in the eligible account at COMEX, but which is a series of vaults. But you're talking biggest money in North America is literally buying up billions and billions and billions of gold and silver every month. And that is the part that's not talked about on CNB Stupid, like, or any of them. Like, why? This is a news story. Like, you would think that if you are seeing literally billions and billions every month and have been since November, that there would be some journalist who has a shred of integrity that would say, hey, maybe we should ask those questions instead. There was an article in on Reuters, Reuters or Forbes, one of them, I think it was Reuters, and it basically was talking about silver now starting to perform, and the title was something like the devil's metal.
Yeah.
You know,
Well, I saw that, the
So-
devil's metal.
they want to cast everything
Yeah.
in a shitty light.
I will say this. I mean, and you know that certainly you do a tremendous amount of research, and I do as much as I can. This weekend, I saw more silver YouTube videos than probably in the last month alone
Yeah.
combined. There was, I mean, it was insane.
Well, there was a lot to
The
talk about.
notifications just kept coming up,
And most of it had to do with the air conditioners. I mean, that's a big deal when that happens.
Oh yeah.
And typically you see shenanigans over U.S. holidays because the world market is still open, right? And so there's very low liquidity, and even the Western traders can move the market very easily when the New York traders are out for holiday.
There was I don't know, you probably didn't get to watch it yet. I sent you a YouTube video link today. I sent it to you and Josh, and it's a little lengthy. It's about 51 minutes, but it is entirely on why silver is not. It wasn't really the guy's opinion. He's saying by how detrimental it is for every single industry for the most part, and that why this isn't a matter of an if it's going to be, it's a matter of when it's going to be. And it talks about, you always say, the military complex. It talks about the solar. It talks about without silver, there would be virtually no other industry. There would be, no solar. There would be no computing. Everything that we need, that we actually live with today, take silver. We take it for granted. The phone,
Including the transmission of money. And I mean, everything has silver in it. I clicked on it. I had 3 podcasts. I didn't have time to watch it, but
it's good to go to bed.
I don't know who that guy was.
And I'll tell you, he was. I'm going to see
Never
if
seen
maybe
him
we can.
before.
No, but I'm going to see if maybe we can link it, because it truly is. I mean, again, it's lengthy, but it takes you through A to Z on why, if you're contemplating maybe purchasing silver for the first time or questioning whether or not you should or you shouldn't. And again, he's not somebody who is selling silver. He's not, but it is just a very, very knowledgeable piece of all the aspects of silver. And I think it's very important. So I'll see if we can get
Again,
that
big
link up.
picture, in 2023, the European Union classified silver critical. The US just did it. China did it in response, and also is going to limit exports as the second largest producer in the world. And I don't know what happened in Canada, but I know about a year ago, there was a consortium of bankers and miners and whomever else that was petitioning Ottawa to have it changed from industrial to critical or strategic. The world is waking up to not just gold and silver, to a rush of all commodities, and realizing he or she who possesses the commodities wins and makes the rules, not just the gold. And it's going to accentuate. When you see the U.S. government put policy and national security under the price of silver, I think of a couple of things. I think not only of silver going higher and the floor under it, I think of Tom Luongo and his thesis that, there is a battle going on between Trump and the aristocrats, the European aristocrats, because here he is trying to take money creation away from the Fed and give it to the Treasury with the Stablecoin Act. Very risky. That's what Kennedy did, and many think that's why he died. At the same time, he outs J.P. Morgan and says they are involved in the Epstein files specifically, and then does this. And then you look at making it a critical mineral basically is going to massively squeeze the LBMA, because everyone now realizes that the governments are out to get it now too and possess it, and everyone's going to want delivery. You have a gazillion ounce short position, almost 2 billion ounces outstanding. Who holds it all? Tom would say it's largely the European banks, and you're talking a squeeze of serious proportions. Now, again, this is just me thinking out loud, but things are going to heat up with silver. I do believe that. I mean, for me, you buy the majors, the larger companies in both gold and silver, and the royalty stock. So in silver, a good royalty stock would be Silver Wheaton. In gold, it would be Royal Gold, Franco Nevada. These are companies that basically lend money to the miners, and it's a better business model, really, and get a piece of the action. And some of the biggers like uh, Newmont or
That's enough.
First Majestic in silver,
Yeah.
Newmont in gold, Barrick. These are the
Keith
big,
Neumeyer.
yeah, Keith for sure. It's in fact,
I think, I listened to a piece on with Rick Rule this morning.
Keith's company is, I think, has the largest percentage of silver of any silver miner, and a lot of the companies that mine silver are actually mining more gold now because it's so difficult to find silver deposits, which are depleting.
I think Rick Rule, I watched a piece with him this morning, and between like 5 and 6 a.m. because, I don't sleep that much. And he actually mentioned several of the same companies. So he actually said that what he did was he took a portion of his junior miners off the table, and he put them into the quality, high quality companies, because he said that 25% that he took off was able to basically lock in the profits, where he, no matter, even if he loses everything now, he got his principal back, and 25%.
We're reaching a level of
Yeah.
performance that the funds have to notice. And his thesis, I'm sure, because I've talked with him a million times about it, is that when the big money comes in, they will first go to the majors and then to the juniors and then to the exploration. It's an order of process.
The accelerating pressure within the precious metals system is becoming harder to ignore as physical demand continues to pull metal away from the paper markets. Delivery requests are rising at a pace that signals deep structural stress, with prominent positions now being removed from circulation rather than rolled into future contracts. This shift reflects a broader loss of confidence in the system's ability to supply real metal when required. Across multiple trading centers, billions in gold and silver are being claimed directly, tightening the available float and exposing the fragility of long-standing derivative structures. Industrial consumption is intensifying the squeeze, while global policy moves have elevated silver to a strategic priority. As inventories thin and liquidity evaporates, the imbalance between supply and demand is forcing a repricing that aligns with the scale of real-world shortages. The environment now leans toward higher valuations as physical ownership becomes the dominant theme. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.